Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Cool. Good morning. How are you doing? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. The says, or the says, screen with naked girls. What are you looking at? I don't think there's naked girls on my screens. You know what's not here? That's interesting. We should do another one. Hang on. Let me make a quick change here on the fly. Yeah. You should only see the disclaimer. Hang on. I'm making a change here. Now you should see blackness, darkness. Darkness falls across the land. The midnight hour is close at hand. All right. And there we go. You should see me, right? Cool. Why is this? This is a little messed up, though. I don't know why that's messed up. And then why is that over there? What? Hang on. Maybe I can just do it this way. Hang on, Bubba. Hang on. Got to get this right, and it'll be good forever. All right. Bingo. Anyways, now we're back in business. Cool. So, good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. No, that is messed up. TradersWay.com. Comment allez-vous? They make these webinars possible for you in your wonderful life, trying to make your life even more beautiful and more lovely. So please visit TradersWay.com. Pay it back. What they want is for you to become a successful, patient, disciplined currency trader that can trade profitably for not just hours, not just days, not just weeks, not just months, but years and years and years and years. Yeah, cool mic, right? Cool beans. Wah, 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 wah. Seems like a radio program. Well, you know, I'm a ridiculous person, as you know, and a few people mentioned that the sound quality is not as good as it should be. It's going to be difficult to get it better than this. I don't know what Booker does. Jimbo, does he use the same thing? That was just built in YouTube, I guess. I don't know. Does Booker do that stuff? What I wanted was like a bubble that pointed to my mouth and it says something, but anyways. So, let's move over. This. Cool. I wasn't sure if chat was going to come up on here or not. Oh, yeah. Something's happening. Cool. Yep. That's the swing trading videos will be up right after this video. All right. So let's go through the. Let's just go through it all. Let's just go through it all. Did we do this one in this group? I know I went over this yesterday with the swing trading group, but this is a trade plan that goes back a while. And let me give a couple of clicks back. Okay. Voice delay. There's a lag on the sound. Yeah, I see that just slightly. I think it's my PC. I think Windows is forcing me to download something right now, so I apologize for that. I don't know. It does seem slow, right? Stingray says Booker has new bots every hour. Really? Why, the one yesterday didn't work anymore or what? Okay, so cool. But you see the general idea? General idea, down, 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 up, up, right? You can see roll reversal here. You could probably see a 618 Fibonacci retracement. You could probably see, it's not really a monthly swing, but something in there. And then you can see if I click in a little closer now, that I'm short right on the, so I can move my stop here just for fun. Okay, you can see I'm short right at the weekly M3. Lower low, lower high. This is a second shot. You could sell here, lower low and lower high, and hopefully it continues down. As you can see, the general thought process here is down, down, down. Is that right, Sev? You know, actually, my new OLED laptop. By the way, I've been using it now for a week to do homework. Holy smokes, is that screen awesome! It's like, it's sick. It's like, wow, it's amazing. But it's got a pen built into it, or more of a stylus, right? So I don't know. I think when I'm on the road, I might try to use that as the mouse. It might be pretty cool. Okay. Yeah. So it's cool. I just haven't used it before. So what do you think, guys? Any thoughts? Any questions? Am I good? Is it all right? Hopefully it'll survive. One thing to notice is I'm short on next week's swing as well. So this is really a trade I made 2 days ago based on next week. Jimbo got that one too? Jimbo. Okay, and of course, the big part of this is the, where's my pen? This doesn't look like it's going to work. Wow, something's really messed up today. All right, let's turn. Yeah, hang on. I think I have to even quit my drawing tool. Something's messed up today. I don't know what it is. I hate this new YouTube setup. All right, so I killed that. Got to start my EpiPen. Well, it's way over there now. Too many screens. All right, cool. Let's see if it'll work this time. Oh, it will. Cool. So this whole idea here is, okay, double top, lower low, lower high. What's the secret word? What's the secret word? Yeah. Ciao. Well, the secret word is actually hammock. So you can see, like, ultimately what I'm trying to show you is nothing special, boring, just doing the job. It's like sticking labels on a can of peaches at the canning factory. Just, right? That's what you're supposed to do. So that's cool. Hang on, let me move this over. Cool. Right? Cool. Jumbo! Okay. Cool. Nice. So just another one. No questions about that. That's cool. MoveOn.com. Enough with the exotics. Let's go to our normal setup. Happy Friday, by the way. Dude, my homework is nuts at school. It's just nuts. School is becoming ridiculously crazy again. I worked for almost 3 hours on one question yesterday, and there's 18 questions due by Monday. Do the math. No sleep till... No sleep. No sleep this weekend. All right, Kiwi Swissy. Well, bouncing off the monthly M2, but not really doing much. Still, it's not falling, not rising. Actually, a little bit disappointing. Ron said, excellent swing trading yesterday. Thank you. I apologize the video's not up there. As soon as this webinar is over, I'll encode it and then head it up. Oh, which ones am I in? Those ones. So I'm short Euro Turkish Lira. I'm long Aussie Yen. I'm long Kiwi Yen. These ones I made 2 weeks ago, I think. And this one's up 300 pips. This is up 200 pips. So I'm up 500 pips for those. I'm up 1,000 pips on that one. And then the new Euro Lira short, new Lira short. And then there's the Euro Rand short. Okay. Plus, on top of that, this original Euro Turkish Lira short, tomorrow, okay, tomorrow I will be officially up 500% interest only. Okay, just on the interest, because remember, this is, right, $100 investment has paid me $500 in interest, plus 1,000 in asset appreciation for a total of 1,500%. And it's only been 6 months. Yeah, but besides that. Okay, so anyways. Gotta love it. But there you go. Is that okay, SWS? Cool. Often I get that question when people are new and you're testing me to see if I'm a scumbag. Did I pass the test or am I a scumbag? Oh. Hang on, I'm trying to move things around. Grand Rising and work. Hey, Aaron. Let's do Eurodollar. Okay, boom. You know, the thing about this coaching platform too is I take a lot of effort to go through trades first, right? Like I draw these lines, then I draw these lines, and I say, hey, you need a double top, then you need a lower low, then you need a lower high, and then we need multiple levels of resistance. Here's one, here's one, here's one, here's one. And I do it all. And then I trade it. Right? Like it's, right? I can't see this chat very well, and then that gets too big. Anyways, we'll work on this. We'll work on this. We'll get it better. We'll get it better. Seedy beady eyes. Wayne, is a risk on or risk off today? I don't know. Why don't we look at that? Okay. Okay. Well, what was the swing trade for the month? M2. The target is this area here. So probably by the end of the day today, you should seriously consider taking profit. Okay? So the trade plan on the first day of the month was this. Okay? That's what this gray area is. It's a target. So we're hitting the target, and you need to know when to hold them and know when to fold them. Well, we're getting pretty close for you to fold them. Okay. Chuck already did, probably right in here at 111.50. I guess we're not quite there, but yeah, 111.50 seems pretty good, pretty reasonable. Remember, you're only trying to be reasonable. Okay. Ultimately, you could probably get it pretty close to 112. Whatever. Right? Whatever. Doesn't matter. This is the moneymaker. Okay. Getting out is 10 times more difficult than getting in. Ron says, I'm still thinking about your Euro 50. No, 500%. Not 50. So that trade was $100 of my cash, and in interest on the carry, I've earned 500. You see what I mean? That's 500%. Yeah, not 50. If it was 50, it'd be $50 on a $100 investment. That's right. Yeah. And that was May, right? That was May. So May, June, July, August, September, October. So yeah, it's 6 months earning 500% a year in interest, right? I think we actually calculated one time, and I should earn 1,100%. But I think also Turkey lowered interest rates, 6 or 7 weeks ago. So maybe it's changed. So now it'll only pay me 1,000% a year. Isn't that amazing? I can't lose any money. Right? I can't. That's the amazing thing. So it's income. Right? It's income. They did lower. Yeah. So whatever, it doesn't matter to me anymore, right? It's still good. It's fine. Okay. All right. So anyways, we're much closer to resistance. We're much closer to the point where you need to be thinking about getting out, not getting in. If you are a bear, one thing you should bear in mind is that maybe around here, around this 112 area, there may be a counter trend set up. Okay. And you would plan for something like this. Down. Oh man, this mouse is bad today. Down, up, and down. Okay? Now, in October/November, this rollover, I don't know if this is true, but let me tell you what I think. Okay? It seems to me in the back of my brain that often, so there's no scientific methodology here. I don't have any statistics, but I'm very often hoping for breakout months. Meaning, if I'm long yen pairs, I don't actually want to get out on R2. Even though I have a rule that says you should always get out at weekly or monthly R2, this month I'm trying to let it run all the way. Now, back in April, May, June, and July, okay, I prepared you and I said, I am going to buy all the yen pairs in the third week of August. Right? How many people can confirm that? April, May, June, and July. I said, in the third week of August, I'm going to buy all the yen pairs. We have to establish that first fact. Otherwise, it's unbelievable. Okay. I said it quite literally 100 times. Okay. On the third week. Yeah, okay. Cool. Now, I also said I don't have a price target. It's a fundamental trade. It's based on macroeconomics. It's based on seasonality. My target is calendar based. Okay? So I really hope, even though I understand the technicals, I hope there's more up than normal. Okay? So think of this not as Eurodollar. Think of this as yen pairs. So we had a bottom like this, and let's say right now we're hitting targets where you should probably take profit. And typically there's a large drop. I'm hoping, remember this is hope, not a strategy. I'm hoping it does like this and gets me to the third week of November. Okay? Hey, some dude is spamming us. Should I let the spam go? Hey, spammer, how do you feel about yourself in the morning? Do you feel good? Hang on, he's being blocked. So anyways, spammer going away. Forever, forever. Goodbye, spammer, forever. And spammer's gone. He's gone. Cool. All right. So that's what I'm hoping for. And I never hope, right? I never hope except this time of year. So anyways, it's sort of a roll of the die, if you will. You are short Euro Lira and long Euro USD. No. But you have to understand, I see what you're saying because short Euro, long Euro, right? I don't actually really care about the Euro, okay? I'm a dollar player. It's weird that the watermarks doesn't fit. Why is that watermark doing that? It's weird. I haven't seen that before. Watermark is in the wrong spot. Huh. Anyways, it's all about the dollar. Okay? Yeah, Craig says the audio, there's a bit of the lag. That's what people say. I think it's my processor. I think there might be a Windows update coming down at the same time. Okay. So anyways, if the Fed is seen as cutting interest rates in the future, even just a trend, then the dollar will be strong. If the market believes the Fed is done, and I mean like not cutting, but they're going to cut one more time and then stop, therefore the market knows that price, then the dollar will weaken. Okay. Mr. Connor says, hey, can you explain swap and correct lot sizes? First of all, those are two questions. I just I'm not sure if you're meaning one, but I think you're asking two questions. Swap is just the income that you're paid. So on those exotic trades, right? On those exotic trades, I'm using $100 of US money in my account, right? So there's $34,500. I used 100 of it. It's like nothing, right? I used 100 of it as collateral. And I went to Europe and I said, lend me some money, Europe. Lend me some euros. And they're like, well, what kind of collateral do you have? And I'm like, I got US dollars. They're like, okay, we'll lend it to you. I said, how much are you going to charge me? They're like, nothing. We're not going to charge you anything. This is Europe. Our money's worthless, right? So anyways, they give me free money. Now, the cool thing is I give them $100. They give me $10,000 worth of euro. Then I own this asset. Remember, I'm ponying up my $100 as collateral, but now I have this asset, this, right? $10,000 worth of euro. What am I going to do with this asset? Well, it turns out Turkey is in a real conundrum. They don't have a good balance of trade, yet they have a lot of debt in foreign currency like euro. So they've gone to Germany and France, right? And borrowed a lot of money. And why wouldn't they? Money is expensive in Turkey, but it's cheap in Europe. So they need to borrow it. The problem is they need to pay it back in euro. So they're, right? And they're in a currency crisis where they simply don't have enough euros in their vault to pay back the loans that they owe. And they owe these loans. It's like a done deal. They may have interest payments and principal payments, just like your mortgage. At the end of it, right? At the same day every month, you got to pay the bank, your mortgage holder. It's a debt. Someone gave you the money, you own the house, but you got to pay the debt every time, principal and loan. Well, that's basically what Turkey is doing, okay? But the problem is they don't have enough euro, so they have to sell lira and exchange it for euro, and that weakens the lira, which means next month they have to sell even more lira than they did this month to get the euro, because the value of their currency has fallen as the amount of it in the open market has gone up. So then the month after they have to sell more, and the month after they have to sell more. And it's kind of like their debt is getting bigger and bigger and bigger, even though they're paying it down. But the value of their lira as a consequence is going up, and they're really screwed. But I'm a very kind-hearted person. I'm a lover, not a fighter. So based on my kind heart, I lend Turkey my euro. And I say, hey, Turkey, here's some euro. But I'm going to charge you for this trade because, right, even though my loan is free, I'm going to charge you for this loan. So I am going to charge you 18%. Cool. 18%. Very nice. Here's the thing. I'm lending them 10,000 euro and I'm charging them 18% on the 10,000 euro. Well, $10,000 worth of euro, whatever that is. 8,600 euro, right? But whatever. Now, I'm collecting this interest. Plus they have to pay back the loan, but I'm collecting the interest, right? But I only ponied up $100. Okay? So, yeah, there's some foreign exchange costs, and there's the value of the euro and the value of the lira and the value of the dollar all changing. So when you account for all of this, what I'm earning on my $100 investment is $1,000 a year in interest. Actually collecting every single day, put in my account. So it's been 6 months, and tomorrow I'm going to roll over $500 collected in interest only. That's what swap is. the interest payment Turkey is paying me. Now, typically, I have to pay pay for my euro, okay? But right now, interest rates are 0 in Europe, so it doesn't cost me anything. So it's a really profitable trade right now. Okay, Mr. Connor? Okay. Now, if euro cost me a percentage, the amount I collect 7 days a week would be a little less. Okay? But this interest payment, I get 7 days a week. This is already in my account. I could trade this. Completely liquid. Already collected. Okay? Okay? Now the profit over here is separate from swap. The profit is my asset appreciation. So I own this debt. You can think of it that way. If that's confusing, imagine I bought an apartment building. Okay? The apartment building doesn't change. It's brick. It's got a roof on it. It's got some air conditioners. It's got a certain number of doors, a certain number of windows. Okay? Do you understand that the apartment building, even though nothing changes, goes up and down in value every day? For example, let's say I spend $5 million on the apartment building. 10 years goes by. It's probably worth $6 million. Another 10 years goes by. It's worth $7,500,000. It's the same building, same brick, same windows. I haven't changed the windows in 20 years. But it's gone up in 50% in value, right? Just the asset. It's amazing how that happens. This is why poor people buy TVs and they buy cars and stuff like that, right? The value of the TV goes to 0. The value of the car drops by 50% in 2 years or 3 years. The value of your BMW drops by 50% in 3 years. Amazing, right? Rich people don't spend money on cars. Rich people don't spend money on TVs. They get all that for free. That's why they're rich. Okay? But if you buy art, swirls of paint on a canvas, that art can go up in value. It's amazing, right? So anyways, there's the asset appreciation. Think of that as the value of your apartment building, right? Then think about swap like rent. Okay? Think of swap like the rent you collect from the renters. That's an income stream. That's a cash flow. Okay? Okay, see? So there's two parts to our trading, right? There's asset appreciation and then there's income. So going back to the idea of rich, if you're wealthy, you should invest all your money in things that go up in value and pay an income stream. So there's two things. You need asset appreciation and you need income. Once your asset is going up in value and you're collecting an income stream that is larger than your expenses, then every single month you get free money. Okay? Income minus expenses equals profit. Okay? When you get that money, think of the income as the rent from all your renters. You can't eat the value of your apartment building going up because the only time you can get that money is when you sell it. So now you get the asset appreciation, but you lose the income stream. So you can't eat the value of the money, so to speak. But that income coming in, minus any expenses you have, is now left over as free money. The renters gave you their money. Cool. Now go out and get your yellow Lamborghini and your ginormous TV. Okay? Right? But don't spend your money. Your money should be out buying another apartment building. To say it differently, in Forex, you need to get more, right? Right? How many trades do you want that pay you 1,000% a year guaranteed? How much would you put on there? As much as you can get. You understand? More. Okay? More. You just want more, right? Just more. So if you own one apartment building that pays you $300,000 a year to own, remember, you don't do anything. You just own it. You have a management company that does the managing and the advertising for vacancies and collecting deposits and collecting rent. And then you hire gardeners to mow the lawn. And like, you don't do anything. You just own a piece of paper that says that's your property. So if that pays you $300,000 a year to do nothing, take that $300,000 a year, save that up until you got $3 million, buy another one. Buy another one, buy another one, buy another one. Okay? Cool. So let's move on. So that's how you should think of your trading, guys. Make sure you capture some income. A fixed? Well, Heath, there's ECNs, there's variable spreads, and then there's fixed spreads. Okay? So your spread shouldn't impact your swap, which is your yield, but contact support. Double check. Yeah, Ron, I know people that do yeah, I know people that buy and sell a lot of diamonds. But they do it for very specific reasons. And I don't know about your friend. You said one of your friends. These diamonds are, let's say, a bare minimum of $5 million each up to $25 million each. They're doing something different, right, with the diamonds. If you're doing smaller, I think owning diamonds as an investment is probably a bad idea. First of all, it doesn't pay any income. And second of all, diamonds are struggling. Manuel says, hey, your lectures get better and better every day. Well, thank you. Appreciate that. Okay, let's look at gold. Not going up, but also not going down. Hello. Why you use too many indicators? Well, thank you for being here, by the way. And I recommend, if you are new, to please subscribe. Thank you for the question. Why do I use too many indicators? Well, that's subjective. Let's do this. I'll show you what I need. Okay? There you go. That's all I need. And if that's even too confusing, I could probably even dumb this down a little bit. I think this is weekly. No. This is weekly. So let's do this. 0. Okay. All right. There we go. Well, you know what? I want to add this week as well. So we'll do this week plus next week. Okay. So I don't know how to pronounce your name. I'm sorry. Yubiri? Is that too many? I have no oscillators. I have no moving averages. This is too many. I'd like you to be a little more open-minded if that's okay. Okay. This is one indicator added twice. One is pivot points on a monthly basis, one is weekly. So are you advocating no indicators at all? So you're saying like one indicator is too many? Oh, thank you, Ernest. Hello, Yaburi. Ilbury. Yeah. Is one indicator too many? Are you advocating trading with no indicators at all? No, I know. I'm asking though. No, guys, hang on. I'm just asking questions. I don't. All right. Relax. Relax. All right. I'm trying to understand when, right? So what's the point of view, and then I can comment about that. Eric B, what do you mean off the M4? M4 is not an entry. Maybe we'll take a look at that next. Yeah, well, that all you need. So what I've been advocating all these years is that there are, yeah, but Eric, that's where you get out. You don't get in at a red area. You get out at a red area. Well, Forex, there is stop loss protection. Let's comment on that for a second. All right, let's say, okay, we're talking about the gap over the weekend now, guys. Okay, so let's say a Forex student is in a trade like this, okay? And let's say the stop is here. Let's say the entry is here. And there's price. So they're long here, long. Here's the stop. Okay. Cool. Okay. Will this stop protect you over the weekend? Yes. Unless there is a gap. How often do gaps happen? In this liquid market, not very often. Especially if your stop is a reasonable distance from where you are now. Okay? And in particular, not where you are now, where price is now. So if your stop was actually very close to price, you're not managing your risk properly. Okay? Now, for you to lose money over the weekend, let me show you what needs to happen. I need some more time here. Okay? So you're long here, and your stop is here, correct? Oops, that was supposed to be pink. Okay? Okay? Now, for you to lose money, let's say Friday closes here. And Sunday Sunday afternoon for me, but let's say Monday market opens down here. So price goes from almost 1,500 down to $14.50. When was the last time you saw gold drop by $50 over the weekend? When was the last time you saw that happen? Yeah, Chuck Duck, that's probably possible. Forex student, I'm answering your question. Hello. Don't know. Then you need to look at that. Okay? You need to look at that and answer that. Otherwise, you just don't know. But let's take this as a currency. What's the likelihood it drops 50 pips? Depends on the currency pair. Average daily range in most currency pairs are less than 100 pips. Okay? So, here's how stops work. Let's do this in yet another color and change it. Okay, the way that stops work is that price, which is this line here that's moving up and down, price has to touch your stop. Okay? Then your stop goes from a working order into and is executed. Okay? And in this case, you're long, so a short position is entered, offsets your long, and you're taken out of the market. Okay? But this price right in here has to actually touch your stop. If you miss it by even a pip, it's not executed. Okay? Now, in scenarios where there is a gap, there's Friday's price, and then the market opens Monday down here. Did price touch your stop? The answer is no. It jumped over top of your stop. In that case, you entered here, your stop is here, and price is here, and you're still in the market. So you're asking about the risk, right? Gap risk over the weekend. How much risk is there? Well, you could look in history and find out how many times gold has gapped $50. Or if it's a currency pair, how many times has, Eurodollar gapped more than 50 pips? Okay? And what you might find is it hasn't gapped 50 pips all year. So you would ask yourself, well, how risky is it? Now, with that being said, what if you jam your stop what if you, and let's do another cut. What if you jam your stop here? What's the likelihood there's a $5 gap on gold over the weekend? Significantly higher than the 50. And what you're doing is you're not really in position to survive the weekend. Okay? You're just not in you're not making enough money. You're not in the trend. You don't have an investment. Right? If you're that scared where you're going into Friday and you're jamming your stop $5 off of gold, you're just, and that's your break even for you. You're just not in a position to, right? Does that make sense? As long as your price touches stops, you'll be taken out. So I think I've had maybe 3 times in 15 years where I was in a situation that was bothersome because of gap risk. But that's back when the average daily range on pound dollar was 250 pips. Okay. So to me, I don't feel like it's nearly the same as it used to be. Yeah. Cool. So oil is just doing what we said it would do. There's nothing really amazing to report here. How many times over the last 3 weeks have I asked you to make a decision, either either $50 up, right? So we're going from 50 to 60. I don't know where 60 is, but right? Or you believe we're going from 50 to 40. How many times have I asked you in the last 3 weeks to make that decision? Okay. So I don't care how you answer the question. I'm only interested in whether you asked yourself that question. So let me show you how to trade. First of all, you do some sort of research and make a decision, or you flip a coin and leave it at random chance, whatever. Doesn't matter to me. Both are acceptable, honestly. You just have to make a decision. Okay. So, if you are a bull, and I believe I've mentioned that I'm a bull. Last week, this was a buy. This week, this was a buy. Cool. Done. Okay. If you were a bear, last week, this was a sell, and which is also this week's sell, right? So that's it. That's it. Bulls had 2 opportunities. Bears had 1 opportunity. There's nothing more to it. Bulls are making a little more money right now, but that could change. This could come back down. You can see it's a clear roll reversal. So it's basically range bound. And if the bulls are right, it's going to break to the upside, and then they're going to buy a roll reversal this way. That's all there is. Okay? That's all it is. If you're a bull, you know what to do. If you're a bear, you know what to do. And if you haven't made a decision on that, maybe consider learning fundamental analysis, right? And if you don't know what to do, consider learning technical analysis. Okay. Swiss, here's what you do. SWS, here's what you do. Open 2 accounts. Okay? I guess you have your account now, but open a demo account for this test. Okay? Whenever you make a trade, Okay, whenever you make a trade on the account you trade with now, do whatever you normally do. On the second trade, on the second account, the demo account, take the same trade that you logically made, but use, let's say, 100 pip stop. Okay. Now let me ask you, SWS, how many pips do your trades typically make? 50 pips, 100 pips, 150, 200? What's your typical profit size in pips? Okay, so then let's do this. Let's have you do on the demo account a 150 OCO. Okay? So, again, on your normal regular account that you're trading now, trade as you normally do. When you make a trade, go immediately to the demo account and make the same trade, put a 150 pip stop and a 150 pip limit. And, right, that's an OCO. One cancels the other. And you are not allowed to manage it whatsoever. All you're allowed to do is take the same trade you took on your live account, but on the demo, you put a 150 OCO. And what we're doing is we're comparing your risk management, which is a variable, and we're comparing it to a fixed. Okay? And what you might find, is that if your demo account loses more than it wins, your bias is wrong. To say it differently, your current risk management technique of getting out early is good, because overall your technique or your strategy or your bias is incorrect. Now, however, SWS, if on your demo account you win more times than you do on your live account, then you've identified that your risk management is the problem. So we don't know if that's actually your problem. So we have to confirm that using scientific methodology, okay? So after doing this maybe 50 times, find out which account makes more money, your live account or this demo test. If the demo test makes more money, then we need to find your proper lot size. Or sorry, not lot size, stop size. So you might want to change it from a 150 OCO to a 100 pip stop and a 150 pip limit. So now you're risking 1/3 less, but you have the same target. And do another 50 trades. And once again, if your demo account's making more money than your live account, once again, your risk management's the issue. And now, right? And then if that's good, try for a 50 150 OCO. And what you're doing is you're trying to find, based on your techniques and your strategies and your ability to enter trades well, you will identify your standardized stop loss, which is the first thing you need if you're going to measure the amount of risk you are taking on a trade. So I don't know if you need a 150 pip stop to be profitable I don't know if you need a 100 pip stop to be profitable. I don't know if you need a 50 pip stop to be profitable. And I don't know if your trading sucks. Okay? So you need to, use scientific methodology to identify specifically what we need to work on. Okay? Does that make sense? Luke asks, what platform do you trade on? This is an MT4 account traded through tradersway.com. Okay. Have any of you new guys subscribed today? Okay. Make sure you subscribe. Thank you. Thank you. I appreciate that. No, Prince. Prince says, Wayne, do you recommend newbies stick to one pair first? Absolutely not. That's one of the dumbest ideas ever. Let me tell you why. Forex always compares two things. In Forex, our trades are relative. Okay? So if all I do is trade Eurodollar, what happens on days when the euro is strong and the dollar is strong at the same time? Or what do I do on days where the euro is, let's say, fairly weak and the dollar is fairly weak as well? Then I'm going to have very mediocre trades. If the euro is strong today and the dollar is strong today, I'll probably not make money at all. Okay? I'm only going to make money on days when euro is strong and dollar is weak, or euro is weak and dollar is strong, which is maybe not as often as I would like. So, Prince, in my book I wrote 13 years ago, I dedicated an entire chapter to this question. Well, oil be. And it's called The Greenback Guru. The reason I called it that is, or how about this? The logic behind the answer is that you need to specialize in something. I really don't care what currency you pick. Maybe it's the currency of your country. So that means you could specialize in rand, Turkish lira, Japanese yen, US dollar, Swiss franc, euro, pound, kiwi, Aussie, whatever, don't care. But you specialize in one thing. And you start by visiting the central bank of that economy, go to their website, and start reading all the material, because central banks do amazing research and they publish this information because they're public servants. So now you can read all their analysis and you can look at the economic data, things like balance of trade, things like inflation, things like GDP, and you can discern fundamentals from that. And based on the type of economy, you could discern the policy of the central bank. It's either neutral, or it's weakening the currency, or it's strengthening the currency. Or let's just say not weakening it. But there's policies in place that logically and intelligently have a predictable impact on the currency. For example, the Fed's cutting interest rates, dollar gets strong. The dollar will remain strong until the market believes the Fed is at the end of that policy. And the minute that the market believes the Fed has decided not to cut interest rates anymore, the dollar will weaken. Done. Just like that. Okay? But you can do that for any currency ever. Anything you want. I just want you to specialize. Because then you can make an assumption like I just said. If the Fed is expected to cut interest rates at the next meeting and possibly the next one and possibly the next one and possibly the next one, the dollar will get strong. Now you might say, well, that doesn't make sense. Well, I'm specializing in the reserve currency. The opposite would be true in every other currency, but you just have to know fundamentals. Okay, if you don't know fundamentals, you're not going to succeed as a currency trader. Okay, great. So you specialize in that one currency. And based on your analysis, your fundamental or long-term technical, whatever you want, you discern whether you're a bull or a bear on that currency. If it's pound, you decide, is it oversold based on fears on Brexit or not? If it's euro, is euro going to go back down to parity or not? What about Japanese yen? What about Aussie dollar? We can look at Aussie dollar. Will Aussie dollar remain weak until balance of trade data improves? Make a decision. By the way, all this information is at the Reserve Bank of Australia's website. Okay? But the thing is, you make a decision on the value of one currency. Not a pair, one currency. And these decisions last anywhere between 6 months and 6 years. So it's not too complicated and all that kind of stuff. Okay? So I could say something like the Fed is done cutting interest rates, the US dollar's weak. And by done, I mean they'll cut one more time and stop. Because we're already pricing in the next one, right? So if I've made that decision based on my research of the Federal Open Market Committee and the Federal Reserve Bank of the United States policy, then the dollar is weak. And I'm done. I'm done fundamentally. It's weak today. It's weak tomorrow. It's weak next week. It's weak next month. It's weak next year, whatever. Okay? Now, if that is the case, I believe the dollar is going to be weak for the next 5 years. Great. Now, today, I need to find something strong to trade. Not a pair. Well, so like the first question is, do I specialize in one pair? Absolutely, totally not. You focus on one currency. You do all the fundamental and long-term technical analysis you can, and that gives you a bias. A set in stone bias. You're a bull or you're a bear. Enough said. So in this case, I say I'm fundamentally bearish on the US dollar. Great. Then every single day, I look at my charts and I say, what's strong today? Because I'm going to dump the dollar. So should I dump the dollar and buy the pound? Yeah. Should I dump the dollar and buy the Aussie? Yeah, that looks pretty good. Should I dump the dollar and buy the Kiwi? Yeah, it'd be all right. Should I dump the dollar and buy the euro? Yeah, that's another good one. Should I dump the dollar and buy the CAD? Heck no! Why? It's weak. Should I dump the dollar and buy the yen? No! Why? It's weak. Why would I trade a weak currency versus a weak currency? Mentally deranged. But like today, if I had said, I only want to trade USD yen, well then today I'm not going to make any money. Why? They're both weak. Or if I say, I only want to trade Aussie pound or Euro pound. Let's say, I only want to trade Euro pound. Well, good. You're not going to make any money today. You understand? Why? They're both strong, yo. Think in terms, right? Think in relative terms. Okay? Don't trade Eurodollar like it's wheat or gold or oil. Okay? And by the way, when you trade wheat, gold, or oil, you're trading them in terms of dollar. That's the other thing. So you're like, why isn't gold going up? Well, look at the dollar. You're like, what does that have to do with anything? Well, it has 50% to do with everything, right? Okay? You see what I mean? So, Luke, does that answer your question? He says, can you go through a strategy to predict which way the currency pair is going? Right there. Thank you, Hope. Thanks, Prince. Absolutely brilliant. Thank you. Thank you. Hey, I have a macroeconomics degree from Harvard with honors, so it's okay, Brad. I'm just sharing. I'm just sharing. Right? I'm just sharing, man. Deep. How did you get the index to come up? I built it. If you want this index, it's available at metatraders.com. metatraders.com. The link is in the description below today's video. Okay. All right, I'm going to pull the plug. I have so much work to do. Oh my God. Oh my God. So much work. So I'll pull the plug. Thank you for being here today. All right. In about 5 minutes, once I hit end stream, in about 5 minutes, the video will be available on YouTube. Will you please leave a comment? Just stick around for a whole whopping, maybe even 3 minutes. It'll be available. Will you please stick around after the video? Right? Go back to like the Forex.Today YouTube channel. So you just click the little logo and wait for the video. And once it's up there, would you please leave a comment? No, I'm not streaming. Did I say tomorrow? I apologize. No, I'm not streaming on Saturday. Would you please stick around the whopping 3 minutes and leave a comment on today's video? Either say hello or thank you. But more importantly, if you could, would you document what you learned today? And if you want to take it a step further, document what you learned and then tell yourself in the future what you believe it will do. Like the benefit of knowing this knowledge now. So you, right? Because you're actually talking to yourself. You visually see it, you intellectually think about it, you physically have to type it, right? And there's an emotional aspect of you saying something that might make you look stupid to the entire world. So there's an emotional aspect for you to say, I admit it, I learned something new today. Wayne, you transferred knowledge from here to me, and here's what it was, and here's how I think it's going to help me in the future. So there's an intellectual aspect to this, an emotional aspect, and what you're also doing is manifesting what you learned and the benefit of what you learned, and you're putting it in about 5 or 6 or 7 different parts in your brain. The intellectual part, your visual part, your emotional part, right? The physical part that actually, the language part, you have to write it in English and type it. It gets, all these lessons get put into like 7 or 8 different parts of your brain. Maybe in the future, one of those you'll retain. Because remember what we talked about the other day. If you don't recall it, it basically didn't happen. Yes, I'm on that too, Andrew. Okay? So, do I have an outro, an intermission? I don't think so. I have an intermission page, but it's not really. Anyways, I guess this could say something else. But anyways, this isn't the end screen. So anyways, peace on earth. May the pips be with you. May our profits be above average. And I will see you on Monday.